We detected a wealthy investor trading AstraZeneca stock, ticker symbol AZN, on the last trading day. And what's unusual about this trade is that these options expire a day after earnings, April 25th. So this could potentially be a trade based on leaked earnings reports. They may know something. Okay, so in this video, we will analyze this unusual option activity to find out how this wealthy investor is positioning for AstraZeneca earnings. Are they bullish or bearish? So that we can also trade in the same direction to also make money while they are getting richer on Wall Street. So without further ado, let's get to the data as usual. As you can see on the options time and sales tape, April 11th, 11:35, April 26 options, the day after earnings. We are not looking at this larger 10,000 contract trade because it expires April 19 before earnings. The April 26, one day after earnings, is more unusual because it is covering earnings. 3,258 contracts. They're paying $125 for each of these 68 strike puts and selling the 63 strike puts for $21. And so when we calculate the trade costs, $125 subtracted by what they sold, $21, each trade costs $104. And since they did 3,258 contracts, total trade costs $338,000. So because this does not meet one of our criteria for $1 million trade, we simply follow the trade without putting much time and analysis in developing our own option strategies. You can see here for the April 26 options, we simply follow the 68 strike puts in the same position, buying and selling at the 63. Okay, and as we explained, they were buying the 68, selling the 63 for 104. And so this is the trade. If you are interested in the higher chance of profit trades where we develop our own strategies where they exceed $1 million, make sure to go to our website. Okay, that's where we share the higher chance of profit trades where there is not necessarily the earnings risk coming up. Okay, if there is earnings, we also have to readjust our option strategies to make sure that we reduce our risk if we do trade earnings. But for the majority of our trades that are higher chance of profit, they are not earnings trades. Okay, so keep in mind we use position sizing when we trade these lower chance of profit trades, such as this one here, this AstraZeneca trade. Clearly is bearish. You can see the profit purple and blue lines are sloping this direction, which is the direction of a lower share price on AstraZeneca here. Okay, this is the x-axis, which is the share price of the stock. Y-axis is the profit loss. You can see more profits if we go down in price, but we will lose profits if it goes up. And that is why when we hover the mouse over this, it becomes negative if it goes up, it becomes positive if it goes down in share price. And that is why the Greeks have a delta that is negative. That is bearish short position. So when we look at this trade, we also want to make sure that these are opening trades. Okay, so for the April 11 trades, we can see that for April 26, the 68 strike puts, we have a total of 7,000, and 63 strike puts, 7,000 here at the volume here. Both strikes greater than the open interest. So we know these are opening trades. Okay. So because it is early in the morning, that is why the current data here is not available right now. Okay. And that is why the open interest here has not updated. All right. So let us know what you think about AstraZeneca stock. Do you think it will go down as these put options are telling us? Or do you think this is just a hedge for earnings? Because that's also possible. And that is why we don't put a lot of capital into this trade. We use position sizing to manage our risk. We put most of our capital into the higher chance of profit trades that we share on our website. If you're interested in those, we'll put a link at the top here. And as usual, please smash the like button, subscribe if you haven't, and have a great day. Take care.